Good afternoon, ladies and gentlemen. My name is Michalis. I am one of the market analysts here at HF Markets, and I'd like to welcome everybody to another live analysis live stream webinar where we're going to be analyzing a different event that we haven't actually analyzed this year so far. There is a specific reason why we have chosen to analyze this event because today's Bank of England announcement may potentially be slightly different to the previous ones and potentially going to create a lot of volatility within the financial trading markets, yes, but more specifically within pairs, currency pairs, which are related to the Great British Pound, but also the FTSE 100 as well. Now, I've already had quite a lot of questions actually from individuals who have already said to me, are we only going to be analysing the British pound? Are we only going to be analysing UK based stocks? No, we will, of course, concentrate on it, especially at the very beginning of the webinar. We will mainly be looking at those assets, but then of course we will look at other assets as well. And of course, if anybody has something specific that they wish to get analyzed, we will be focusing on both fundamental and technical analysis today. Then of course they can request it through the comment section. When we get a comment and also questions, of course we will be answering it live. We've already got a lot of people who are saying, shall we be shall we be buying, shall we be selling, shall we be speculating in a specific direction? Of course, this is something we're going to look at throughout the announcement. And what I will say is, it's of course very important that we see what is actually going to be announced and how the market reacts, because for example, when I was a financial advisor in London, we used to say quite a lot that very large institutions, which are the institutions which actually drive the prices of the assets, because they make a very large part of the order flow book of each asset. They, of course, a lot of the time actually buy the rumor and sell the news. So it's important that we look at what it's actually going to be announced, what's going to drive the market, and also what is the market's reaction, because it doesn't necessarily mean if the announcement is traditionally something which potentially is negative for the pound, that it is actually going to cause a collapse in the price. We need to look at what it actually means for the monetary policy, for inflation, for interest rates, and also for investment yield. And of course, we need to look at technical analysis as well to determine which is potentially the appropriate price for us to take into consideration. Now, before we start looking at today's event, and before we look at our presentation, we've got a presentation which will only last approximately 7 to 8 minutes. I just really want some background information about what we need to take into consideration when today's event is actually released. And then we'll go straight exactly at 2 o'clock to the announcement so we can look at what is actually being announced. But before we look at that, very quickly, I want to do an introduction. This isn't important to today's event. It's not going to make you a successful trader, but it is important to know a little bit about the individual who is providing you with this information. So a bit about myself. My name is Michalis. A lot of you probably know me. I've been in the market a long time. Originally, I was a financial advisor in London. That I was there for 4 years. Since then, I've mainly been within the EU. I do hold two licenses. I hold a license in the UK, and I'm also a licensed financial advisor based on the SciSec license as well. So here in Europe as well. And these live stream webinars are here, of course, for educational purposes. So they're not here directly to say you should now be buying, you should now be selling, or telling you how to speculate the market. But what we want to do, of course, is to provide you with the information, to point out certain factors within the market, to provide as much educational material as possible in order for you as individuals to be able to determine how to obtain signals and how to be active in the financial trading markets with knowledge and with experience and expertise. So the GBP performance, this is definitely something we need to take into consideration. The first thing I want to point out to everybody is this has looked at the last interest rate decision announcements, the last 6 months. 6 occasions, sorry, not the last 6 months, but the last 6 occasions that the Bank of England has made a decision. Now, what you would notice is out of the 6 months, on 5 of the 6, when the price declines, it continues to remain low or continues to decline. When the price increases, it continues to increase. Only one of the 6 occasions that we've had an interest rate decision over the past 6 occasions, as I said, only on one occasion we had something different, and that was going all the way back to August. So we're going back, ladies and gentlemen, almost 10 months. Okay, so that's quite a long time ago. If we look at, for example, March, you can see the price after 5 minutes, after 1 hour, and after 24 hour, all moved in the same direction. If we look at February, it increased after 1 hour, increased after 24 hour, and increased. So it's always been in the same direction after the announcement. So this is something for you definitely to take into consideration. The only occasion was, of course, going back 10 months ago and looking at August. Now, the other thing I will mention, ladies and gentlemen, is that on a lot of occasions, not on every single occasion, but on a lot of occasions, when you're looking at the short-term price movement, so when you're looking at the price movement in the next 4 hours after the announcement, most of that price movement you will see happens in the first 5 minutes. So here, for example, if we look at 5 minutes, we can see the price decline by 0.12%. After 1 hour, it's not declined by any further. If we look here, 0.11% here is 26%. Again, there's not much of a difference. And again, in the first 5 minutes, most of the price movement took place. Same scenario here, more or less the same. Well, in this scenario, it's the exact same. So this is also something for everybody to take into consideration. The only other thing I want people to note is that over the past over the past 72 hours, the pound has declined. So over the past 3 days, the pound has declined by 0.66%. The best performing currency of the day is the US dollar. So if you have individuals that want to speculate that the pound is going to decline, of course, you don't want two currencies which are declining. Okay, because then you've got what is known as a tug of war scenario between the two currencies. Ideally, you want to speculate the pound's going to decline against a currency which is strong and strengthening as well. So, in terms of that, you can take into consideration the US dollar. The weakest performing currency of the day, which is actually declining by 0.20%, is the Japanese yen. So if you want to take into consideration, or based on what is announced, you want to speculate that the pound's going to increase, a currency pair that you can take into consideration, very simply because it's not only very weak today, but it's actually been very weak for approximately 18 months now, is the Japanese yen. The Great British Pound Index, which is the value of the pound against 6 currencies, all put together as one index, is also down today. It's declined by 0.17%. Now, what I want people to also take into consideration, ladies and gentlemen, is what is going to drive the price movement? Because a lot of people will say to me, what's going to drive the price movement is the interest rate decision. If we get a decline, it will create volatility. If we get a price increase, it will create volatility. That's incorrect. Everybody knows what the interest rate's going to be. That is already priced within the market, so that's not going to have any effect at all. What is going to have an effect, ladies and gentlemen, is especially the Bank of England votes, because basically it's a committee known as the Bank of England's Monetary Policy Committee. It's a committee of 9 members, and they vote on the interest rate. So they vote whether to increase, decrease, or keep interest rates the same. So that is definitely going to create a lot of volatility. Now, what's currently being priced within the market is that we're going to get the British pound decline. This is what's been priced within the market, because you can see the pound has declined over the past 3 days. We can see that the pound has declined today as well. It's actually the second worst performing currency today. We also need to take into consideration that the Federal Reserve is also definitely taking into consideration keeping interest rates unchanged for at least until September, but potentially even further away. We also need to take into consideration that the FTSE 100 has increased for 3 days as well. Now, people would only be buying UK equity if they believe that the central bank is going to take into consideration, very simply, decreasing interest rates to support the economy. So these are the things we need to take into consideration. This is what's going to drive the market. Now, you may say to yourself, why do we believe that the Bank of England is going to show signs, indications, or votes that they're going to decrease interest rates? And there's a couple of things we need to take into consideration. What I will say in terms of the votes, ladies and gentlemen, that we can see here, I'll try and get this through this as quickly as possible so we're not late for the announcement. What you definitely need to take into consideration is that the latest speech by the member of the Federal Reserve was actually Sir Dave Ramsden. He actually gave an indication that he's very soon, or is already ready to start to vote to decrease interest rates. So he's a member that didn't previously vote for a cut, which potentially now may be voting for a cut. And we've already got Dr. Swati, which has been voting for a cut over the past two occasions. Why are they voting for a cut? Because you can see here, inflation has significantly declined. What also we need to take into consideration is that the UK economy has decreased over the past 2 quarters. So technically, they're in a recession. Not most and not many uh, economics would actually point and consider that the UK is in a recession. But if we get a third quarter where they're going to see a decline, even if it's only a very small decline, then economists will actually start to believe that the UK economy is officially within a recession. So this is another reason. And another reason as well is that also over the past 2 quarters, the past 2 months, we have seen employment significantly decline as well. So this is something we also need to take into consideration. Now, ladies and gentlemen, let's refresh our calendar. So hopefully everybody can see the calendar on the chart. Let's refresh. Let's go to today. Let's go to filters just for a moment so we can only have the UK available. There we go. Let's filter that. Here we go. So what has been announced, ladies and gentlemen? We'll go straight to the votes because, like I said, interest rates are going to have no effect within the market. And not only that, they were expected that they weren't going to change. They haven't changed, so let's not spend too much time on that. What I do want to spend some time on is if we go back 2 months, we had two members of the Monetary Policy Committee voting for interest rate hikes. They were one of the only members that were actually seeing members vote for actual hikes and a more restrictive monetary policy. We have today no member of the 9 members of the committee voting for a hike. We were expecting that only one would one would vote for a cut, which was Dr. Swati, and 8 actually vote for a pause. But we have had a shock. We have had something very different. Even before the announcement was made, ladies and gentlemen, there was 2 things I made a comment on. Number one, that it's not just going to be only Mr. Swati. It will be Mr. Swati, and it also will be Sir Dave Ramsden that is voting for an interest rate cut. Another thing which I also mentioned is that the market is pricing in a potential interest rate cut very soon, an imminent interest rate cut, and that this is negative for the GBP and positive for the FTSE 100. So this is what I mentioned before the announcement was even made, approximately 10 minutes ago. So here we can see what we previously stated was correct. We don't know what price movement there's going to be in the market. We're going to look at that now and we'll start analyzing the British pound. We did, though, yesterday. If you look at our analysis, if you go to Google, for example, and type in HFM uh, or HF market, should we say, analysis like this, and you go to our let's type in HFM. Actually, it may take us straight there. There we go. And if you go to actually our analysis, what you will actually see, if you go to daily analysis, we've had two analyses over the past 2 days. And over the past 2 days, we have uh, informed individuals why potentially the pound may decline, why potentially the Bank of England may give indications of a sooner rather than later interest rate cut. Okay, so this isn't something new. We've been saying it now for 48 hours. But of course, we need to look at also the price movement. So let's see okay, I can see a big decline, at least against the US dollar. We'll look at other assets, of course, as well. So this is exactly what I'm referring to, guys. So even before I've looked at the chart, for example, let's go to 1 minute chart and let's look at 6 minutes ago. So we've got 1, 2, 3, 4, 5, 6. So the price was up here. It declined, ladies and gentlemen, by 0.31% at first, slightly retraced higher, and it's currently hovering at 0.25. So a big decline, ladies and gentlemen. If we look at the day's price movement, bear with me. If we look at the day's price movement, the day started here, ladies and gentlemen, and we can see based on the day's price movement, let's see how low we currently are. We currently decline based on the day's price movement by 0.40%. So even before me looking at the charts, you can see how we determined what type of price movement there was going to be in the market. This is why we have these live analysis sessions, because we can provide certain information which potentially can point to what type of price movement we're going to see in the market. But definitely a great help is also if you're going to look at other factors as well. So developing a bias within the day. So over the past 48 hours, we've on our analysis website given certain factors within the market and certain signals and indications as to why the pound may decline. So that's point number one. Looking at what's the worst performing currency over the past 3 days. What's the strongest performing currency over the past few days. So looking at all these factors, looking at the past 6 events where we've had the Bank of England's monetary policy decision and statement. Something which is also very important, ladies and gentlemen, is the forecast. The forecast has just been released. Probably isn't available online yet, but most likely should be within the next 20 minutes or so. In terms of the forecast, something which is very important is the Bank of England's forecast on inflation. Because if they're forecasting that inflation is going to decline, for example, if they believe by the end of 2025, inflation would decline to 1.5%, whereas in the previous meeting they advised, based on the statement and the forecast, that is actually by the end of 2025 will decline to 2.1%. It's a massive improvement and significantly lower inflation rate. So that's also another indication on how the Bank of England is going to react. The question was, because we always believed that there was going to be an interest rate cut, at least on one occasion. Some economists actually advise it will be on 2 occasions at 50 basis points. Some advise it will be on one occasion at 25 basis points. That wasn't a question. Because, ladies and gentlemen, that was already priced within the market. Currently within the market is actually pricing in 50 basis point cut by the end of 2024. So very simply, in the next 7 months. But what we actually wanted to know, ladies and gentlemen, is if there was going to be a cut in June, so next month, or if there's going to be a cut in September. So we can see we're swaying towards a more dovish central bank and weaker Bank of England. Now, when did we start speculating in our every single day morning market analysis that the pound is actually getting indications that the pound is going to decline? I'll add another point. I will slightly amend here also the RSI, because the RSI is slightly incorrect. So we've got a period of 18. We want a range between 25 and 75, and we'll also add the neutral level as well at 50, like so. So what do we want to see, ladies and gentlemen? Here, which is the 7th of May, so we're going back 2 days ago. So this is exactly where the first blog came out, analyzing the exchange rate and confirming that the pound may actually decline against this currency at least. Of course, it's a different scenario when looking at, for example, the Australian dollar, when looking at the Japanese yen. We'll look at those pairs as well. The benefit, though, to the Great British Pound against the US dollar, known as the cable, is that the spread, ladies and gentlemen, is significantly lower, and also so is the swap fee. So this is a great advantage, especially to scalpers and also to individuals looking at the swing methodology of trading. But this is where we first got the signal that the price was going to decline. For example, the price is declining below the 75 bar exponential moving average. So this is a 75 bar. So you can see some moving average, 75 bar, the method is exponential. So here we're below. Now that's not enough. We want it to be below. We also want to at least see that there's lower lows and lower highs. So we can see this is one high here. This is the third high, and this is the second high, and this is the third high. So we can see we've got three lower lows and lower highs, and we're now trading below the 75 bar EMA. Then, in addition to this, ladies and gentlemen, if we're looking as well at the RSI, we can also see the RSI here is actually trading at 43.5. Now, this is below 50. So if it's below 25 and 50, between 25 and 50, is indicating that sellers have control of the market. Whereas if it's below 75, it's an indication that there's bearish sentiment towards the price. Now, we want to see both to get an indication, as well as the lower lows and lower highs, to see an indication that the price is going to decline. Doesn't mean we instantly go to the chart and look and instantly just go straight away and click sell without doing anything else. No, we've developed a bias using these indications that I should now start looking at indications for the price to decline. Doesn't mean we go straight away and click sell without taking into consideration the price. The other thing, ladies and gentlemen, I want to check for today is where we are in terms of the Bollinger Bands, in terms of oscillators as well. Now, we've got the Bollinger Band. We can, number one, see the Bollinger Band finally has started to tilt downwards. So this is also indicating a decline. We can see we're trading below the 50 moving average. We're trading between the bearish and the neutral lines of the Bollinger Band. If we look at oscillators, we can see we're on the negative side of the MACD. The latest crossover on the stochastic oscillator is the downward crossover. And even when we're looking at a period of 14 on an RSI and on a higher time frame like the 4-hour, we can see we still get an indication that the price is very simply being controlled by sellers, but not yet oversold. People want to, for example, be slightly more risk averse in regards to it being oversold. You can slightly increase your decrease your period, but even so, we're not yet at 25. We're at 32, just over 32. So there's plenty of aspects of the market we can take into consideration there. Now, what do we want to see in order to pinpoint where the price is going to go to a level that we can instantly speculate a decline? We've established that we want to speculate a decline potentially, um, very simply because if we're looking at the indications here, we're below the trend line, we're between the two levels that indicate sellers are controlling the market. We're in the bearish side of the Bollinger Bands, and also the oscillators are speculating a decline. So we know we need to switch on over to a smaller time frame to determine which price is potentially an area that we can speculate a decline. Now, the first thing, of course, we want to see, without a doubt, is that we want to see a bearish crossover. Now, we're not going to use the crossover in order to trade, very simply because if we're going to use the crossover and the oscillator, even a stochastic oscillator as well, on such a small, short-term time frame, a lot of those indications will be false indications, false breakouts, and very simply will damage our success rate. Of course, we don't want to damage our success rate. What we do want to establish, though, ladies and gentlemen, on the 5 minutes is that we're trading when the momentum is in favor of the downward price movement, and that we're only going to take into consideration speculations and trades pointing and speculating downward price movement, because of course this is what we're getting signals for on the larger term time frame. So ladies and gentlemen, how do we do that? What we want to do is, once we get a retracement, people think of a retracement as a bad thing. A retracement is actually a great thing. It's not a bad thing. People think, retracements are so difficult. It's volatility, and when I'm trying to trade the trend, it moves against me. I hate retracements. Retracements aren't a bad thing. It's like, for example, if somebody's looking, if you're looking to buy something, okay, and somebody says to you, I will sell it to you for $10, and you say no. And they come back the next day and say, I'll sell it to you for $11. You say no. And then they come back the next day and say, I'll sell it to you for $12. You still say no. You're not willing to buy it at that price. And then they come and they say to you, I'll sell it to you for $8. This is a retracement. It's an upward trend. You can see the price is increasing each time, which is being offered by sellers to the buyers. But then he offers a better price. You will be very happy. You'll be over the moon. The same thing applies to when you're trading. Um, if you're getting a lower price, if it's an upward trend and you're getting a lower price, that's great news for you, because it's a better, more competitive entry. And if we speculate in downward price movement, like we can see now, upward price movement is great as well, because again, it's a more competitive entry point based on the price. But when we get a retracement, so here, for example, we can see the retracement, ladies and gentlemen. This here is very, very clearly a retracement. The only thing we want to do is get enough momentum downwards in order to speculate the downward price movement. So how do we do that? As I draw the Fibonacci retracement levels between the low, which is here, and the high, you can see all these levels start to point up. Now, what do we take into consideration? This level here, the 61.8, is the main level. Now, if the price declines below the 61.8, not just about touching it, but trades below it, it's at that point that you can speculate, and you've got a signal to speculate the downward price movement. So, for example, this isn't a signal here because it's just touched the line. We wanted to trade below. So where it actually comfortably crosses below is actually at this level here. This is only a 5-minute time frame, by the way, guys. So this is where we get a speculation that the price is going to trade and going to decline. So look at the price movement here, and look how low the price has declined. Okay, it's amazing, ladies and gentlemen, how low the price has declined. And what you also will see based on this is that the RSI is very low. The RSI is actually in an ideal area where it's actually going to, and keep in mind that this is actually on 30, where it really should be on 25 and 75, if not 20 and 80, which is the traditional levels and parameters for the RSI. But either way, you can see This is very clearly at a level where sellers are controlling the market. And in addition to this, if you're slightly cautious about the fact that the stochastic oscillator is crossing upwards, it's not an issue. You can wait until it crosses downwards here. Okay, so that's not an issue. If you want to also wait for the stochastic oscillator to point downwards and have a bearish crossover. So, ladies and gentlemen, this here is the price where we got a signal to speculate a decline. Okay, this is the price here. Now, I've got a question from somebody. Let me quickly answer this question. I can see a lot of comments, great signal, great preview, and things like this. Thanks for the great feedback. Let me just quickly answer this question, though. Okay, so that's a great question. If anybody else has questions, of course, leave a comment and I will answer the questions live as part of today's session. Now, what this individual's asked is how can they scale out? Okay, this is a very good point because you can actually use the Fibonacci levels as well in terms of the scaling out. Now, there is other methods. We've looked at methods as part of our webinars. If you haven't looked at our webinars, you can of course watch them and get access to them for free. Um, what we've looked at is many options within regards to scaling in and scaling out. You can refer to the reward to risk ratio versus your success rate. There's also the sentiment cross method that you can use as well. But because we've got the Fibonacci retracements, you can also use, it's very well known to be used in order to scale out. So for example, let's say you open a trade here to speculate a decline. Instead of opening one lot, for example, you can open instead you can open 4 trades and open 0.25 lots on 4 occasions at the same price. It's still the same as opening one lot, but you're very simply just splitting up your target and splitting up your trades. And what you can do is you can place your target at the level set by the Fibonacci. So here at 123.6, you got a target. Then the next target is at 138, which is here. The next target is at 121, which is here. And the next target is at 261, which is here. Now, people wondering how much profit that is. This here is basically a trade moving in your favor by 0.05. So 5 points. Here is 7 points. Here is 10 points. And here, ladies and gentlemen, is 0.22 points. So very comfortable and very good trade and quite a lot of profit as well. But then you've got more signals as well. You got the next retracement. This is the next retracement here. You can do the exact same, ladies and gentlemen, because keep in mind, if we go to the 2 hour, we're still in the same scenario. The scenario hasn't changed. We're still trading below the 75 bar EMA. We're still trading in an area of the stochastic of the relative strength index where we're not getting any divergence, we're not oversold, and also we're in that area, that range where sellers are controlling the market based on that indication. So even on this next retracement, because it's still a retracement, nobody should think of this as a correction because a correction needs to actually move all the way up to here. The retracement is slightly larger. It's quite a large retracement than really we would see a retracement. And normally a retracement would actually decline to the 61.8. So normally a retracement would decline to here. It's slightly higher without a doubt. But ladies and gentlemen, that's only very simply because we're looking at an event today. That's the only reason. So what can we take into consideration now? This is a retracement. We want to speculate again another decline in the price because it's a new day. It's a new impulse wave potentially. So we want to look at speculating. We draw the Fibonacci levels again. We again look at this just below the 61.8. So for example here. So that's where we would open the speculation of the price decrease. You could have also opened the pending order, guys, based on this as well. Then you can see the price since that decline and that crossover, ladies and gentlemen. We can see the price declined straight away within 5 minutes, all the way by 0.27%, so 27 points. And currently now it's hovering about 0.13. So, to be honest with you, on most occasions it would have hit the take profit, especially if we're looking at short-term traders. If we're looking at longer-term traders, of course, we don't know yet the outcome, very simply because it's still very, very early. Of course, you can trade other currency pairs as well for the British pound. We will look very quickly at the Euro USD. Somebody says, how do I use the Fibonacci levels? The exact same way I'm using it now. Okay, this is how you can use one way of using the Fibonacci levels. Now, there's thousands of methods, of course. We can't look at all of those methods today. A very popular method, though, is the one we're currently using. We'll look at it again. We'll look at it again now. So something else individuals will also take into consideration is the euro against the pound. This is getting indications that the euro is controlling the price movement. We're seeing a slightly stronger retracement though. So because we're seeing a retracement again, we can go on to the 5 minutes. Let's go to the euro against the British pound. And what can we do? We can draw the Fibonacci level like this. So if the price increases just above the 61.8, so approximately here, you can use that as an indication that the price is now going to continue increasing in value. This is based on this retracement. Now, let's say if it slightly declines further, so the retracement size is slightly changed, which isn't impossible. Let's say it declines to here before starting to move upwards. Then again, you're very simply just amending that entry point. Okay. Now, what I will say is this is a slightly difficult pair at the moment, very simply because both currencies are decreasing in value. Okay, there's other difficult pairs as well, such as the Japanese yen. That also may be potentially difficult for individuals. Let's look at that as well. Doesn't mean it's going to be indefinitely very difficult, but just at the moment, very simply because it's a currency pair where it's seen two currencies decline in value. Of course, we're still seeing that downward price movement after the announcement. But for example, if you look at the pound against Japanese yen, you can see it's actually increasing in value here, and then it declines after the announcement. Whereas if you look at, for example, the British pound against the US dollar, you can see throughout the day on the whole chart is trading in the same direction. Yes, we've got retracements. Retracements are great. Retracements are normal. That's not an issue. But you can see it's trading in the same direction. So this is why I stated at the very, very beginning of the webinar, when you look at a currency pair, you shouldn't make the mistake of looking at it, for example, like crude oil or natural gas. Yes, it's one asset. It's an exchange rate. That is the asset. It's one asset. But there's benefits to analyzing it as though it is three different assets. You analyze it, number one, as the pound against the US dollar. So this is one asset. You also analyze it as the US dollar as an individual asset, and you also analyze it as the pound as an individual asset. Now, ideally, you don't want conflict there. For example, if there's two currencies that are increasing in value, there's likely to be larger retracements. Sometimes there will be more sideways price movements. And generally speaking, it's more difficult to analyze and to predetermine how the price is likely to move. Whereas if you're looking, ladies and gentlemen, at a currency where one is increasing in value, the other is decreasing in value, you're likely to see a longer, more stable trend. For example, at the moment, like we are seeing with the British pound. And even if I go slightly longer term, you can see the British pound longer term is actually indeed declining. Let's go to 15-minute time frame even. You can see it's declining here. Okay. So this is definitely something you can take into consideration as part of your analysis as well. Now, I've got somebody here who's actually asking if I can look at other assets as well. Yes, let's look at another pound pair first, and the FTSE 100, and then we'll move on to looking at a different currency as well. So let's look at the pound against the CAD, which is also another quite a volatile asset, but another asset which is very popularly traded. So let's go to, you can actually see, let's actually go and see the 2 hour time frame first. So here you can see a slightly more delayed indication that the price is going to decline. So this decline actually took place not on the 7th, the evening of the 7th, but the afternoon of the 8th. So slightly more delayed, but nonetheless, you've got an indication here, ladies and gentlemen, that the price is going to decline. We're trading below the 75 bar, we're trading below the neutral on the RSI as well. If we switch to the 5 minute time frame, not the 15 minutes, you can see we're gaining momentum again. We're of course going to draw a Fibonacci level here. So if we're going to decline and get enough momentum here to this downward price movement, then there's an indication there based on technical analysis that the price potentially is going to decline. What I will say though, ladies and gentlemen, and we'll actually go back to the presentation just for a moment. Let's go back to this slide. Let's get our pen out. What can you see here? First 5 minutes versus the next hour. You can see most of the price movement happens in the first 5 minutes. Look at this. 0.37, 0.42 after 1 hour. It's only increased by 5 points. Here, 0.12, 0.12. No difference. Down 0.32, down 0.32. There's no difference there. So you need to be slightly cautious when we're looking at this here, that there's already been a lot of price movements. So yes, you may get an indication here on the Fibonacci retracement that yes, momentum is again gaining and potentially, and we've got an indication now that the price is going to decline, but you really need to think about, is it going to decline indeed? Okay, today's announcement was slightly different, so we shouldn't compare it too much with other announcements, but you need to be slightly cautious about the entry. Why? Because there's already been quite a lot of price movement within the market. And if we measure the traditional price movement, look at this downward trend here. So this is what is known as an impulse wave, 0.18%. If we look at the previous one here, we're looking at 0.30%. If we look at going even further back here, let's look at the impulse wave, 0.16%. So on average, it's about 0.21% on average. At the moment, we've declined, ladies and gentlemen. Let's measure it. We've declined at the moment by 0.29%. So there's been a lot of volatility already. So we really need to be cautious of if the price is actually going to continue that downward momentum. Maybe in the long term, yes, and the medium term, yes, because of course it's a very big announcement, very strong indication. It's the first time in years that we have seen two members of the Monetary Policy Committee vote for an interest rate cut. But of course, the timing is going to be extremely, extremely important. Now, as promised, I did say that we would look at other assets. I can see most people are asking for the NASDAQ, so I'll mention the NASDAQ before ending today's webinar. Let's actually go to the 2 hour time frame just first. Probably indications of bias controlling. Yes, I can see that. So we have indications of bias controlling. We've had it for quite a long time. It's actually been since here. So since the 2nd of May. So we're going back a whole week of indications of upward price movement. And we've had actually a whole week of upward price movement as well. Here is nothing more than a retracement at the moment. If it declines below the trend line. So here's the trend line. If it declines below here, there we need to be slightly cautious and say to ourselves, okay, yes, it's still a retracement. It may decline below here and very simply be a retracement. It's just retracing back to the resistance being flipped onto the support. But we need to be slightly cautious because we're trading below an average price. At that level, if people have access to order flow, may be beneficial to look at that, to look at, for example, delta statistics, to see if there is substantial amount of sell orders, especially below this trend line, to see if that's likely to continue. They can also look at the depth of market to see where pending orders currently are, and that can also help them determine if the price will decline. But at the moment, we're very simply seeing a retracement at the moment. Here, though, we have indications that buyers are controlling the market. The only concern is that the RSI is very close to being below 50. So ideally, most people, they really want to see upward momentum before speculating upward price movement because the RSI is very low. But we're definitely above the 75 bar and we're above the 50 on the RSI. So technically speaking, in an indication that the price is going to increase. We can see a very clear area here, which is significant on one, two, three, four, five, six occasions. This is a very significant level within the market. We can very clearly see that. So definitely there's an indication here, ladies and gentlemen, that if we're going to cross above this level, we may potentially get an indication that the price is going to increase. You're not going to use Fibonacci on this downward price movement, and I'll explain why. Here we've got the Fibonacci levels. We're based on the Fibonacci level, actually just now within a buy signal, but we're not going to use it. Why? Very simply because even though it's retracing downwards, so it gives us an opportunity to look at this area and look at upward price movement. Yes, that is true, but we've got a high, a lower high, and we're currently on a lower high as well. And also we've got a lower low and a lower low. So I'm not quite comfortable based on that signal and using Fibonacci. But again, if we're going to cross above this level here, for example, it's a very different scenario. Then we're actually seeing some substantial momentum for us to take into consideration. So, ladies and gentlemen, I've been speaking for 45 minutes now. So I don't want to spend too much of your time. If anybody has any questions, feel free to ask now. If anybody has questions, I'll only leave the webinar open for a couple of minutes. If people have questions, they're more than welcome to ask now. Okay, so I can't see any more questions. So let's end today's session. Enjoy the rest of your evening. For anybody who's currently trading, good luck, trade safe, trade responsibly as always. Feel free to register on our platform because there's a lot of free information. There's a lot of free webinars as well. We have hours and hours worth of live education, live webinars. We have a lot of seminars as well, locally in Africa, in Asia, in Latin America. So feel free, of course, to register on our website so you can get access to those for free. Also, if we have individuals that don't know how to trade, I've got individuals here, that say to me, should I buy, should I sell? I understand this indication, but really now is it the point to be selling? Somebody just a moment ago said how to trade gold. Well, also to take into consideration is that, of course, we have copy trading. So there is traders which have experience. Some of them have a track record of successful trades. You can, of course, see all of their trades. You can see their balance. You can see their equity. You can see their open trades, closed trades. You can see what they're trading, how much they're trading. And what you can do is look at which individual has a strategy which you personally support and feel comfortable with, and you can follow those. individuals if you wish. Of course, you can start small and start with a low trade size, so you can test him or her, see that their track record is actually going to continue. Um, and then, as you're seeing profits and seeing more success and a success rate, then of course you can give uh, a higher level to that specific strategy. So keep in mind, for individuals that struggle with trading, you can, of course, get access to copy trading as well through our platform. So I've got an individual who says, can you very quickly look at gold? Yes, of course I can. So let's find gold. So gold, ladies and gentlemen, I'm not going to go into a 5 minute time frame on this. Very simply because it's at the neutral level. Okay, so anybody who's been telling you ever since this part here, so ever since the 7th of May, anybody that's telling you buy, sell, is providing inaccurate signals because we're seeing no strong downward price movement or strong upward price movement. It's a sideways price movement. That is the indication. It's had that indication now for the last 2 days. Very simply because it's just hovering up and down around the 75 bar trend line. And the same thing applies to the RSI. We're currently at just under 50. So that is at the point where it's at the neutral level. So it's at a higher risk because we don't know if buyers or sellers are controlling the market at the moment. So that is at the neutral. So we cannot give a signal based on the trend while it's at a neutral level. What you can take into consideration is, for example, mean reversion methodologies. So that's the end of today's session. Trade safe, trade responsibly. Enjoy the rest of your afternoon. And we'll see you very, very soon on our next live analysis webinar. In the meantime, goodbye.